Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code. This is the Forex Super Model weekly review for Monday the 22nd to Friday the 26th of November 2021. Okay, we've written up the weekly flows to get us underway then. So for the period 22nd to the 26th, Euro dollar plus 26. So over that period, Euro dollar as an FX pair gained 26 points or pips, Euro yen minus 42, Euro pound plus 97, pound dollar minus 118, pound yen minus 216, and dollar yen minus 59. If you plug that in to the formula, you get a negative unopposed driver in the pound at minus 431. No backdoor flows, the opposing positive flows mainly going into the yen at plus 317, into the euro at plus 81, and the dollar is the positive rock at plus 33. Activity plus or minus 431. So that was the weekly flows. We've got this unopposed negative driver in the pound, and yesterday was a very lively day on the markets, and we had the yen. If you look, I'll just grab this. The yen was positively driving and the dollar was soft, so we'll talk about more of that later. So we'll stop that there and we'll write up the asset classes. Right, we've written up the asset classes then. So US dollar index, basically it's come off now. It's 0.19 from the high. It's come off 19% from the modelled high. Gold is at half marks. Been chopping around a lot. Oil had a big sell-off day yesterday. It's now 0.29 from the floor, 29% from the model floor. Dropped about over 12% at one point. Excuse me again. Wall Street, S&P Tech, they've all got the same look. They broke, and the Tech actually broke twice, and they've come back. Wall Street's come back 0.21 from the high, S&P 0.22, and the Tech is 0.18. So they're roughly in lockstep now, roughly 20% off their modelled highs. So it was a rough day for equities yesterday particularly. Right, US 10-year and the bund, this is the price then. So the price broke down through support on the US 10-year previously, so yields were very strong, and now we've had a good bounce up again. It's 0.40 from the floor, it's 40% off the model floor, so yields have come right off in the US. And the bund yields are right up near the top, so the price is right up near the resistance, so we've got relatively soft yields in the bund. So you've got a weakening of yields in the US, but the yields in the European bund are still significantly weaker. Right, copper chopping around 0.36 from the floor, below half marks, and US steel is at half marks. Right, so we'll just stop that there. We'll write up the data cycle, which is our version of the economic calendar, and then we'll do the final analysis for next week. Right, we've written up the data cycle then. So China, tier 1 neutral, tier 2 slightly positive, dollar tier 1 positive, tier 2 very positive, German neutral to negative, euro positive to neutral, yen neutral to negative, pound positive to reasonably very positive, CAD positive to neutral, AUD negative to neutral, NZD neutral to positive, and the Swiss is neutral. So what have we got? We've got a very strong dollar cycle in data cycle in the dollar. We've got a strong pound as well here, despite what's been going on, and we've got sort of neutral to mixed in the others. So let's have a look at the flows then. So just to remind you then that over the week then we had the pound, it was the unopposed negative driver, driving positive flows into the yen, helped by the equity transmission within the equities falling, driving positive flows into the yen. and the euro and the dollar were relatively static over the week. But Friday, the last trading day, which was yesterday, we had the yen being driving positively with the equity sell-off. We had dollar weakness, pound weakness, and euro positive to neutral. So and last week, just to remind you, we had the euro weak. The euro was weak to the exclusion of all else in the majors, and the pound was relatively strong. So we've got reversal flows from last week, basically going on there. And what we'll do is we'll rub this out, and well, no, we'll keep it there at the moment. So we've got dollar, euro, yen, pound, CAD, AUD, NZD, Swiss. So next week we've got ADP week, NFP week. So we've got significant data coming out. So that's the really, we've had this Thanksgiving holiday and this break and this shake up in the markets off the back of numerous factors. There's been worry about the new COVID strain and all the rest of it. So we've got ADP, NFP next week. Equities have taken about a 20% drop, which has led to a positive yen transmission. The pound has been hammered off, basically off the back of opposing flows and negative Brexit news. So, but yet we've got this positive data cycle in the pound there, and we've got a pretty positive data cycle in the dollar. The dollar sold off from the highs yesterday. So that's interesting. And CAD, you've got oil has come back significantly. So oil has done a big about turn. So that's maybe significant there. And then the commodity currencies are likely to be negative off the back of the equity transmission as well. So that's where we were, sort of are running into Monday. It'll be interesting to see what happens on the Asian flows. The Americans will be back full go from Monday. And obviously they had a shortened trading day yesterday, so that didn't help, thin liquidity and all that. Right, so what do we think is going to happen? Is this pound weakness, dollar weakness, euro strength going to continue? Well, that's the question really, and the likelihood is that we're going to see further. You might see a bounce on Monday. So depending on what the flows are up to, you might see a bounce. The pound, as we said, if you look at the weekly flows, it's minus 431 unopposed, and that means one of two things. It means either it's either the start of a further drop, or it's the floor. It's likely to be the start of a further drop, we think. So you're likely to see where are we? Here we are, negative and plus in here. You're likely to see pound flows going out like that. The yen's likely to be positive again, and the euro dragging along positive behind, and the pound negative, and the dollar somewhat negative as well. But the dollar will bounce at some stage if you get significant risk off. So that's something to bear in mind. Yields have come off in the dollar on the 10-year, but they may well bounce back. So we're going to be looking for dollar strength early in next week as we swing into probably further risk off in equities and oil. They normally like to rub it in, so we would expect more chaos in the markets on Monday. That's where we are. It's very difficult to make any hard and fast predictions without seeing the Asian flows on Monday, but that's what we're going to be looking out for. We're going to be looking for this re-strengthening of the dollar, which will be part of further risk off in equities and yen strength, bit of euro strength, and the pound will probably be get hammered again. So that's where we are. Hope that was useful. No video tomorrow, but we're back in business on Monday for the usual daily briefing. So thanks for watching and goodbye.